Hi traders, you're welcome back to the Forex Geek channel. In this video, we are diving into a simple moving average trading strategy for beginners that will help you identify trends, find entry points, and make better trading decisions. Now, moving averages are one of the most widely used indicators in trading. All right. I doubt if there is any trader that has been in the game for a while that do not know moving averages. Now, the moving averages help smooth out price action as they serve as dynamic support and resistance levels and even generate trade signals, okay? But the real question is, how do you use them effectively, right? How? Now, by the end of this video, you will understand what moving averages are and how they work. You're also going to understand the best moving average settings for beginners. You're also going to understand a simple moving average trading strategy that works. And finally, I'm going to be showing you how to combine moving averages with price action for better trade decisions. Before we get started, make sure to hit that like button, subscribe, and turn on notifications so you don't miss any future trading strategies. Now, let's just get into it. Before we dive into the strategy, let's first understand what a moving average is and why it is important. Now, a moving average is a technical indicator that calculates the average closing price of an asset over a specific number of periods. That number of periods now is the value that we have inside this box. So this helps smooth out price fluctuations and gives traders a clever picture of the market trend. There are two main types of moving averages. They are not the only types of moving averages, but just they are the two main types, which are the simple moving average and the exponential moving average, okay? The simple moving average calculates the average price over a set period, while the exponential moving average gives more weight to recent prices, making it more responsive to price changes. Now, the key takeaway that I'm going to be giving you for this is that moving averages help identify trends and can act as support and resistance levels, as you can see on the chart, okay? And then shorter moving averages like, the 9 period, remember that this box is very important. Whatever value you set here determines how the moving average is going to, reflect on your chart. Shorter moving averages like the 9 day, the 21 period, the 9 period, the 21 period, or the 50 period. They react quickly to price movements. Okay, so they are shorter term moving averages. But then for longer term moving averages, if your trading strategy is more of long term moving strategies, you can use the 100 period. You can see this is the 100 period and the 200 period. So the 100 period and the 100 period and 200 period moving averages are for longer term strategies. They help determine the overall market trend. Now that you know what moving averages do, let's just move on to the best settings to use. Okay, now choosing the right moving average settings depends on your trading style. Okay, but here are the most commonly used ones. For short-term trading, which is scalping or day trading, you can actually use the 9 period EMA and the 21 period EMA. Okay, because this helps to catch quick price movements. It helps to catch quick price movements. Okay, then for the medium-term trading, you can use the 50 period SMA. Just change this to simple. The 50 period SMA and the 200 period SMA. This is for simple. This is for medium-term trading or swing trading, okay? This is best for trend confirmation and trade signals. Then for long-term trading or position trading, you can use the 100 period SMA. You can use the 100 period SMA and the 200 period SMA. It helps identify major market trends. Now for this strategy, we're just going to be using the 50 period SMA. So I'm going to change this back to 50 and the 200 period SMA to identify trend direction and generate trade signals. Now let's just go step by step through this simple moving average trading strategy for beginners. The first step is to identify the market trend. When the 50 period SMA is above the 200 period SMA, the market is in an uptrend, so you should be looking for buying opportunities. Okay. Then when the 50 period SMA is below the 200 period SMA, the market is in a downtrend. You should be looking for sell opportunities. Then the next step is to look for moving average crossover signals. All right. The next step is to look for moving average crossover signals. For a buy setup, when the 50 period SMA crosses above the 200 period SMA, it signals a potential bullish trend reversal. Then for a sell setup, when the 50 period SMA crosses below the 200 period SMA, it signals a potential bearish trend reversal. Okay? Then the next step is to confirm with price action. To improve accuracy, always confirm the moving average signal with support and resistance zones, basically. Always confirm with support and resistance zones. Also, pay attention to candlestick patterns. Okay, watch out for bearish candlestick patterns or bullish candlestick patterns, and also make use of trend lines. Okay, in as much as the moving averages already serve as dynamic support and resistance zones, do not neglect your trend lines. All right, do not neglect your trend lines. Okay. Now it's important for you to note that a bullish crossover at a strong support zone. For example, if you have the shorter term moving average cross above the longer term moving average, the 50 SMA cross above the 200 SMA around the support zone, it shows a stronger buy signal. And when you have a bearish crossover around a resistance zone, it shows a stronger sell signal. Then for your entry and risk management, you can enter the trade once the moving averages confirm the trend. Then set a stop loss just below the recent swing low for a buy trade or above the recent swing high for a sell trade. For your take profits, you can use previous highs or lows as targets, or you can apply a risk to reward ratio of 1:2. Then, to increase your accuracy, you can actually combine the moving averages with maybe RSI or MACD or any other indicator of your choice for extra confirmation. Even though moving averages are simple, many traders misuse them, okay, and they make costly mistakes as a result. So here are some, things to avoid. The first is trading every crossover signal. Not all crossovers are strong, so always confirm with price action, okay? And secondly, do not ignore the overall market trend. The best trades happen when moving averages align with the main trend. And finally, it is bad for you not to use a stop loss. So always protect your trades with proper risk management. And that is it. Now you know how to use this simple moving average trading strategy to identify trends and make better trade decisions. If you found this video helpful, make sure to hit that like button and subscribe for more trading strategies. Also, drop a comment below. What is your favorite moving average setting? Let us discuss. In the meantime, keep learning, keep trading, and I hope to see you in the next video.